right, let's get going. So welcome to the Tory Burch Foundation webinar. Today's topic is taxes, what you need to know. I'm Lori Fabiano, president of the Tory Burch Foundation, filling in for Gabrielle McGee, who usually moderates our webinars. We have two dynamic guests today who prove that talking about taxes does not need to be boring or scary. Face it, it's a loaded topic. And, when I get frustrated in dealing with my own taxes, I think of the Albert Bushnell Hart quote, which is, taxation is the price which civilized communities pay for the opportunity of remaining civilized. And when I think of that, I actually feel a little better. So let's meet our experts. I'm going to do quick intros, but these are incredible women. So I encourage you to Google them and read their bios. So Megan Gorman is the founder and managing partner of Checkers Financial Management, a female-owned high net worth and financial planning firm. She is a senior contributor at Forbes. She is adjunct law professor at Golden Gate Law School in San Francisco. She is on the board of trustees for the National Endowment for Financial Education, which until 2 seconds ago, I didn't even know existed. I'd love to hear more about that. She is a tax attorney by training and expert in financial fitness for individuals and businesses. And Lauren Yamanaka is co-founder and president of Team CFO, which provides outsourced CFO and accounting services for small businesses. She has over 20 years experience working with small and medium-sized businesses. She is the former chair of the National Association of Women Business Owners, and we just found out that's their logo behind her. He has served on the National Women's Business Council, an advisory panel to the President and Congress on economic issues important to women business owners. And she is an expert in building financial management strategies. Megan and Laura are going to share their expertise as we all prepare our 2020 business taxes. Megan's going to begin with a presentation, and then Laura will join for a robust Q&A. Please use the Q&A box and put any questions you have right in there, and we're going to try our best to get as many as we can. We also have some questions that we got from you all ahead of time. So, Megan, over to you.
Excellent. Thanks so much, Lori. Well, first of all, let me just bring up the presentation onto the screen. First of all, I want to say I'm really excited to be here today with Laura Yamanaka. We're going to go through some of the basics right now of taxes and what you need to know. But don't worry as we go through the presentation, because if you have questions, we are going to do a really robust Q&A. And I think we're going to try to make it as fun as possible. So, taxes are never really the most exciting thing, but they are a necessity in life. And so when I go through presentations like this, I always like to start with a quote. And I want to start with a quote today from Warren Buffett, as you all know, who is an amazing investor. And back in 2008, when we were in the middle of the economic crisis, in one of his letters to his shareholders, he wrote, "You only find out who is swimming naked when the tide goes out." Really powerful quote. And I can see Laura nodding in relation to it, because I think that's very true when you have a business, when you have a small business, whether it's just you or it's you and 20, 30 employees. If you don't put the right foundation together, you're swimming naked. And if we were all going back 12 months ago, when the pandemic started and we were looking at things like the Paycheck Protection Program and EIDL loans, what a lot of small business owners found was that they didn't have the right foundation in place to be able to take advantage of some of these key components to helping businesses survive during COVID-19. So our goal today, both Laura and I want to make sure that you are not swimming naked. So I always think it's a really good way to sort of visualize all of this as a toolbox, right? What should be in your toolbox in order for you to be successful? And I have sort of 4 things we're going to focus on today. The first is legal entity setup, okay? The second is going to be bookkeeping. The third, tax planning. And the fourth, retirement planning. And the thing is, if you and your business can master all four of these areas, you are going to be set up for success. So, the first place I want to go here is I want to go to business entities. And there's really 5 main entity setups. Now, when we set up our business, it's sort of funny, and I have my own business, so I can relate to this. I think of my business as myself, right? I mean, I don't have children. It is my baby. I think about my business all the time. I'm really entwined in it emotionally. And the thing is, that is what creates success in a business. And I think all of you are probably doing the same thing with your businesses. But the truth of the matter is, when you're building a business, even though it becomes a key component of our identity, it's really important to separate the business from ourselves, to have that separation between church and state. So there's 5 main business entities that people typically set up: sole proprietor, S corps, C corps, partnerships, and LLCs. And so this is sort of the parameters that we work with. Now today, for the benefit of time, I'm going to focus on 2 of these, okay? But during our Q&A, feel free to ask Laura or me anything on any of these types of entities. So as you're sitting there, I want you to be asking yourself, what is your entity setup? And I hope that everyone is able to have it roll off the tip of their tongue. So as I said, we're going to focus on 2 main business entity setups today that I think a lot of you have. One is sole proprietorship, and the other is limited liability company, or LLC. And these terms probably sound pretty familiar. Now, what is the sole proprietorship, right? Because we talk about it all the time, but truly, what is it? And a sole proprietorship is an unincorporated business owned and run by one individual with no distinction between you, the owner, and the business. And it's a really simple way to start a business. It's a simple and common structure. And in fact, if you don't proactively go out and set up a business entity setup, it's the default, right? Because basically, in order to do this, you just need a business license, right? And taxation is very straightforward. And we're going to get to this in a bit, but Schedule C is where you're going to report your income. And for sole proprietors, they have complete control over their business. And that's a very powerful thing. But to get these benefits, one of the issues that we face is that there are sometimes some negatives to it. And that is because there's no legal separation between you and your business, you can be held personally liable for debts and obligations of the business. I'm going to say that again. You can be held personally liable for debts and obligations of the business. And that can be a challenge, okay? Now, if you're in this setup, I don't want anyone there going, oh my God, I'm a sole proprietor, this is a problem. There are solutions for this. This is why God created insurance, right? So sometimes the best solution if you're a sole proprietor is to make sure you're insured against the risk. And that cost of insurance is money well spent to protect your business. I also just want to mention here, because my best friend is a marriage and family therapist in Los Angeles, that there are certain professions that the sole proprietorship is what the industry would like them to do. So if you're a marriage and family therapist in California, you can't open an LLC. It has to be a sole proprietorship. So this is a great entity setup for a lot of businesses. And I'll tell you that about 12% of all businesses in the United States are sole proprietorships. Now, the other business that a lot of people set up are limited liability companies. And I'll tell you, limited liability companies, they've really been trendy over the past 30 years. Prior to the 90s, I think the only state that really did LLCs was the state of Wyoming. But starting in the 90s, these became very, very popular entity setups. And, basically it's a legal entity that can be formed to own and operate a business. And it provides the same liability, limited liability as a corporation, but it's easier and cheaper to form and run. And so remember, when you're setting up an entity, you're creating this idea of a corporate veil around yourself to protect yourself from a liability standpoint. And you get that with an LLC. It puts it out there in its name. Now, there's a lot of benefits to this, and Laura and I are going to get to this in the Q&A. But some of it is you get personal asset protection. You've created that corporate veil over the business and separated it from your personal side of your finances. But the other thing is, like a sole proprietorship, we also have pass-through taxation. And I'm going to hit on this again on Schedule C. But this means there's no real special forms you have to file for an LLC federally. It all pulls through to your Schedule C, and you report it there on your personal income tax return. I just put a little asterisk about that because some states, and I'm sitting in California right now, requires an LLC return to be filed, but it's pretty straightforward. And there's a lot of simplicity in forming these entities, okay? So you could go online and do it today. You could get it done over the course of this webinar and setting up an LLC. You can also engage with an attorney to get this done. Now, people go to look at an LLC and they'll go, oh God, I don't know if I want to do this because there's a cost involved, right? So setting it up is a cost, and states have annual filing fees. So for instance, again, I'm in California. Our annual filing fee is $800. Although right now we have a special deal going on with the state, because if you start an LLC in 2021, 2022, or 2023, they waive that fee for the first year. But that $800, that can be a lot when you're starting a business. And then there's always attorney costs. And I always tell clients a good amount to sort of build into their projected budget, if you're going to have an attorney set you up, is about $1,500. And that's reasonable, that's competitive, and it makes sure that you get the entity set up correctly. And the other part of this is, just remember, the costs involved are a minor negative in relation to all the benefits you get. So I know when we start up businesses, we're so focused on the business that we really quickly look at entity setup. But the truth of the matter is, this matters, and the protections you get are incredibly important so that you aren't swimming naked. Now, if you're relatively new and having a business, or you're unsure what to do on this information, here's the deal. There's a need to invest in the people around you. Invest in the team that is going to help you build the business. I like to look at it like building a house. If you don't put the right foundation in, the house is always going to be shaky and unstable, right? So talk to an attorney, talk to a CPA. They can be great resources in planning. They've been there, they've done it, they've seen lots of things. And the truth of the matter is, most of the people on this webinar are women. We as women have to support other women. So if you want to build this team around you, look for other women who are attorneys and CPAs who can help you, because sometimes they might know things that you might not realize, like how to become a minority-owned business, right? If you've done it yourself as a female business owner, you're willing to share that data and help people on the path. So invest in your team, because it makes a huge difference. Now, before we move on completely, I want to answer a question that I get from people a lot. And I get asked all the time, should I have a business bank account? Now, the answer is very clearly, yes, of course. I mean, this is so key. We went back, and I see Laura nodding her head because I know she knows. A year ago, there were so many people we wanted to help with PPP, and yet everything was muddled together with personal data. And trying to pull it all apart, it was really, really different. It was difficult and it was hard. And a lot of people did not get PPP. And it breaks my heart because I actually believe PPP was a great program. But the thing that you have to remember when you're building a business is you've created this entity, and it's a living, breathing thing. And so it has its own expenses. So when you set the entity setup, right, you're creating the framework, the vessel. But what you also have to be doing is creating a financial life for the business. And having a bank account is key, because when you do that, what you're making sure is you're allowing your business to function within the financial system here in the United States. So, when you start to think about it, right, how do you sort of bring this entity and the finances to life so that you can be successful financially and be successful with taxes? And a lot of it has to do with understanding that the entity and the bank account, probably your business credit cards, all create data. And data is what allows us to understand what is going on with our business. I mean, it'd be like going to the hospital because you think you're having a heart attack and the doctor doesn't ever run any tests. Without having that data, you don't know what's a viable business. And so terms like expenses, tax, income, cash flow, profit are so important. And so the thing that ties together the idea of an entity and taxes is the wonderful world of bookkeeping. Now, I will be the first to tell you, bookkeeping is not sexy, okay? But bookkeeping is a key component to having a viable business. So when I said I'm a business owner. My business on March 6th is going to turn 6, and it's my little baby. And one of the things I love in looking at my business is I still have my very first profit and loss statement. I'm going to go into what it is in a minute. But, I love having this because I have the ability to see the distance I've come. And the reason is a profit and loss statement, or P&L, is a financial statement that summarizes revenues, costs, expenses incurred during a specified period, usually a fiscal quarter or year. And I will tell you, as a business owner, I love my P&L. I like to have a clean P&L. I get mine monthly. I have an outside controller who runs it for me. And I love to look at it because it gives me control. It gives me the ability to see what's working in my business and what's not. Where am I spending money? Where am I willing to invest? And so that data is just so key because it's not just about having a business, it's about having a viable business, a business that is successful and profitable. And there's a lot of great programs out there, okay? So this is something you can make a choice on as a business owner. You could do it yourself or you can hire someone. And the two main programs that people use, they're all in the cloud, are QuickBooks and Xero. And they're great programs because they take the data from the bank accounts, take the data from the credit cards, and they allow you to create this statement. But I will tell you, as somebody who does this for a living, sometimes having a living, breathing person as a bookkeeper can be great because you as a business owner have to make decisions. And some of the decisions you have to make is where are you going to spend your time? Running a business is like drinking water out of a fire hose. And I will tell you in my case, even though I could do this myself, I have the background, I have the technical capabilities, I do this for clients, I have a controller who does it for me. And that's because I would rather spend my time going through my P&L and making business decisions versus trying to figure out how to do it. So a bookkeeper or bookkeeping services can be incredibly valuable, and it's something that a lot of people should consider. Now, you're probably saying, okay, well, bookkeeping, I've got now the entity, I've got the bank account, I got the bookkeeping. What does this all have to do with taxes, Megan? Like, what's the point? Okay, well, the thing is, in order to understand taxes, you have to properly report your business, your income and your expenses so that you understand where the business is. And this is important because if the information is right, it lets you grow your business. And it goes from, getting loans for the business. We saw this last year with EIDL and PPP, attracting talent, selling your business, right? I mean, wouldn't it be great if you grow a business and then somebody wants to acquire you or you want to acquire someone else? So these things are going to be key. So I made a little pretend business for us today, just to give you an idea. So for those people who don't have P&Ls, how they can visualize it. And this is Mary's Creative Design. It's a very basic, straight up profit and income statement. And what you can see on the top is that Mary had gross sales of $45,000 last year. She was a creative. She does creative designs. And then what she was able to pull from the bank account and the bookkeeping software are her expenses. And as you can see, she didn't have a lot of expenses, but she had some. She had advertising expenses. She had rent. She had office expenses. She had utilities. And so her total expenses, as you can see down here, was $10,195. So Mary's income was $45,000. Her expenses were $10,195. So she had a profit of $34,805. So Mary can use this data. Mary might be sitting there today saying, okay, well, for 2021, 45,000, it was great making 45,000 revenue or sales last year, but this year I want to make 15% more. Or she might say, oh, there's no market for this. What expenses can I cut in 2021? This statement allows you to plan. And remember, I said it's good to surround yourself with people who are advisors, right? So being proactive with this and sitting down with your CPA, not on April 1st, but sitting out with your CPA throughout the year to get help and advice on what you should be doing. This is probably one of the most valuable tools in your business toolkit. Now, when we get to tax time, I talked about it with sole proprietorships and LLCs, and in particular single member LLCs, which I know a lot of you have. And that flows through to your personal return. And you hear that all the time, and you're like, well, what does that mean? And that means you're going to probably put it on Schedule C. And so, Laura and I, we live in the tax world. We're very comfortable with the forms. Most people don't like to go read tax forms. I would tell you, as a business owner, it never hurts to pull up Schedule C and pull up the instructions, and just once, you can do it all the time. Just read through it. And the reason is it gives you some insight to why the IRS sees it as a viable business. So again, on the top part of the Schedule C, all they want is data. So you'd put your name, you put your social security number, and then on line C, you put your business name. And you can see there's two sets of numbers, B and D. So the IRS likes to code businesses. So from manufacturing to legal to financial services to insurance to creative design, interior design, you name it, the IRS has a code for it. And that code is going to go in B, okay? And that sort of alerts the IRS to what type of business you have, which if you think about it, they're trying to understand, do these expenses make sense? Does this make sense in context of that industry? And then a lot of businesses, when they set up their entity, they get a tax ID number from the IRS. Very easy to get, takes about 10 minutes going online, and the IRS will issue it to you. I encourage people to get an EIN. And so Mary's entered that there in line D. Now, the other parts to the top part of a Schedule C is we've got the fact that she's a cash accounting method, which most people will be, unless your CPA has you doing something differently. And they ask if you materially participate. Now, that might be an obvious question, because if you're running a small business, materially participate, I mean, it's taken over your whole life, right? How are you not materially participating? But it is important to let the IRS know that you are materially participating, and that if you started the business in 2020, again, I will tell you, when I started my business in 2015, I had checked that box, and it was probably helpful for the IRS because I ran at a loss my first year. And so the IRS probably wasn't surprised, because they're like, okay, she's got to get a lease and, her landlord, and buy desks and buy computer equipment. It was not likely that I would be profitable my first year. Now, one of the things, and Laura and I are going to get into this, is the Q&A. So I'm going to go over this briefly, but we will get back to this. So we will answer this question. The IRS is also trying to make sure everybody's reporting income, because Schedule C is one of those areas where people can fudge their income. Now, they want to make sure that people are reporting payments they made to others, right? So we're all sort of tracking each other. So they will ask you if you filed any Form 1099s. And these are forms that you file if you've paid someone $600 or more in the year. It's a 1099 NEC, and it's for rents, services, and things like that. So we'll get into that into the Q&A, but they want to know that. Now, our buddy Mary here, she didn't do any 1099s. So her business is a little bit more straightforward. So this sort of announces to the IRS, here's my business. This is like the shingle outside your shop. And then they want the income. Now, the great thing for Mary is she's already been doing her P&L. This is not Mary trying to find receipts going, oh God, what did I make? Who did I get 1099s from? She's had that tracked. And so it becomes a more elegant and straightforward way to report your income. Now, I kept it simple here, but some of you might have things like inventory or cost of goods sold. Some of you will have multiple columns here. Again, It depends on your business and how your business operates. But what I'm really focused on here, because I get a lot of questions, and I know you guys are going to have questions for Laura and me on this, is expenses. Okay. So part 2 of the Schedule C lays out all the different types of expenses. And coincidentally, it sort of matches the P&L, right? So if you think about it, you're telling a consistent story. And so what you can see here is Laura is able to take a deduction for her expenses. And her expenses here on line 28, where they all add up, equal what it did over on the P&L. Now, that's not often the case because sometimes people will have things that they depreciate, assets like computers or phones or equipment. But for a straightforward perspective, it matches her P&L. But Schedule C also lets you take advantage of other deductions. So one of the most popular ones, particularly right now during COVID, is the home office deduction. And I will tell you, this area used to get audited like nobody's business because the rule was very technical. You couldn't have anything crossed into the office. So you couldn't have your kids in the office watching cartoons because then that would start to make it not a business space. So the IRS a couple of years ago said, okay, we're tired of having all these audits. We want to make it simple for taxpayers because we don't want to punish the ones who are actually following the rules. So they created a simplified method that allows you to take a part of your home as your home office. And the maximum amount of square footage you can take is 300. So in Mary's case, she's in a 1,500 square foot home. She's using 300 square feet for her business. So at $5 a square foot, she is able to take a deduction of $1,500. So for Mary, her income that the IRS sees here is even less than what we saw in the P&L. And so this is really important because, again, you want to maximize your expenses. So the big question is, how do I know if I can maximize an expense? How do I know what is out there? And the IRS test for whether you can maximize an expense is very straightforward, and you should memorize this. An expense.
I'm sorry, can I ask you a quick question?
Sure.
Sika asked something and it just really relates to this. She says she has a retail business of handmade scarves, but she had hardly any sales this year because of COVID. And she's wondering how her inventory, can it be written off here? Is it an expense here? How does that work?
So Laura, do you want to jump in on this one? Do we
Laura,
want to
you're on mute.
You're on mute.
Mistake.
Okay, we can hear you now.
Okay. So it's one of those questionable areas, right? And I will tell you, I have to say this for my legal concerns, is any advice that we give you here is not advice for you personally, because it really makes a difference on your personal situation. So anybody who's asking a question about inventory and whether you can deduct it or not in the current year, my counsel would be, you really need to engage a technical tax CPA to take into account the question, where you live, your municipality, your county, your state, as well as your federal, because there's as many as 4 or 5 different levels of taxation that you have to look at, and they are not always the same, right? In fact, many times they aren't the same. I know, like I live in California, in Los Angeles, Santa Monica has their own queerisms regarding taxes that are not applicable and consistent with county or state and federal, right? So first off, there's not an easy answer to this, but I will say this. It is very reasonable this year that a lot of entities are losing money because they did not make any sales this year. And although I don't have a line into the IRS directly, they have said they are going to take into account, and Megan has alluded to this also. They want to know about the context and what kind of business you are, where you are at. They are not going to be surprised if you have losses this year. So therefore you can take, quote unquote, that deduction of inventory because you're saying it's no good. Now it has to be, you can't write it off in the current year and then sell it in the following year. It has to basically go away. You're going to have to donate it, toss it in the trash. I know it sounds terrible. I really don't mean it that way, but When you say, can you take your inventory as a deduction and write it off, it means it has no future use in your business at all. And this is where the IRS gets really cranky though too. It hates it when you take deductions and you shouldn't. So if they do catch you, like, and you know, we can talk later about how they can catch you. They will look at you very, very, very negatively, and then open yourself up to a lot more further examination out of that one error. So,
And
Megan, if you
let's go back. Sorry.
No, and I think Laura brings up such a great point, which is this is complex stuff. This is a 20-minute primer,
Yep.
right? But when you hire people and you know, I know Laura's group does similar stuff. You're hiring someone to work through the puzzle pieces. I will tell you, when I'm actually doing a return, and I think Laura, you probably do the same thing, we're talking about it with our team to make sure we're reporting it a certain way, because it is so complicated and the rules can contradict, or it depends on the industry. So find a really good CPA who's going to sit down with you and help you figure this out, because again, these issues trail year after year.
Right.
So I want to get to the Q&A. So I want to finish up this last couple slides, because I know Laura wants to get in there too. So ordinary and necessary is key. What is ordinary expense? It is anything is normal for your industry. What is necessary? It is helpful and appropriate for your industry. So if traveling was important in your industry, that's an ordinary necessary expense. Your computer, your earbuds, right? You know, cars can be an ordinary and necessary expense depending on the fact pattern. You know, business meals can be ordinary and necessary. There's special rules with that. And then even just supplies, right? Paper, pens. I mean, I'm a tax geek. I have calculators still. You know, going to seminars, doing all of that stuff. These are ordinary and necessary. And I will tell you, if you're doing things through QuickBooks or Xero, you're obviously saving that, but you want to also keep some of your key receipts in case you get audited on something that might be a little bit trickier. The IRS, when they audit you, it's not innocent until proven guilty. It's, oh, you took that position, prove it. And I tell you, and Laura, it's nodding her head, there's nothing better when you have a client who is so diligent about keeping their records and you just say, here it is, and you can back up every number. I love those moments.
Yep. They save money too.
Totally. The last thing I want to just touch base on is retirement planning. And you might be like, well, Megan, why would you and Laura be focused on this when you're talking taxes? And this is important, okay? Because you remember, we're doing this whole running a business thing to generate income to reach financial goals. And that means retirement. And so it might not be today, but when you're building your strategy in, you've got to factor this into your planning, because it can also save you taxes.
Yes.
So, you know, the last thing I'll say is there's a bunch of retirement plan options out there, and we'll talk about them in the Q&A. But this is where having a team around you is really important, because there's so many choices, from SEP IRAs, solo 401ks, simple IRAs, regular IRAs, Roth IRAs, and health savings accounts. And these are all vehicles you can use, and you want to make sure that you're using them. So I want to get into that more in the Q&A so that Laura and I can just sort of walk you through some of this stuff. The last thing I forgot to mention on the deductions, I just want to go back to that. Healthcare premiums are deductible. They are just not deductible on Schedule C. They go on the front of the tax return in the 1040 section. So again, one of the things I want to just reiterate, and Laura touched on it, is having an expert help you is important, because sometimes the return, where a number will go, I mean, it's intuitive to me, but I don't think it's intuitive, because the IRS is a bunch of tax people. We pull it all in certain places. You want to make sure you understand that. So as Laura said, you know, anything we're saying today does not constitute tax and legal advice, and everybody has different situations. But remember, when you go to talk to your tax advisor, whether it's an attorney, a CPA, an EA, you know, what you want to make sure you're doing is you're thinking of the 4 tools in your toolbox: entity setup, bookkeeping, tax planning, and retirement planning. And if you can sort of have a strategy that encompasses all 4, then you're working on all 4 cylinders, and you will have a strong foundation for your business. So on that note, I'm going to turn it back to Lori, because I think we've got a lot of questions.
Sorry, we sure do have a lot of questions. So, and they are falling into a couple different buckets. One is just on preparing taxes. And folks want to know, how do you know when it's really time to get an accountant versus just using software or self-filing?
I'm going to let Laura go first.
Save your voice, huh? Yesterday, and let me tell you, of course, Megan and I are accounting people, financial, tax. It's important to us. We think it's important. Let me tell you why it's important to you, and especially this year. There have been so many changes in the tax laws, the interpretations that have been coming out from Congress in response to COVID to help people. And it's not just coming out in one little book notice and everybody applies it. It comes out in dribs and drabs, interpretations, Congress acts, reversals, timing periods. It is so complex that even tax people that I know are always not on the same page. Okay, they haven't been current. So even more so now than I did before. Even if you're just starting out, but you plan on having a business on an ongoing basis, or even if you're very vanilla in that sense, I really, really suggest finding some sort of tax help to help you. Now, it goes in ranges from, you can get, sometimes if you're not making money yet, there are a lot of women business centers, small business centers that are college programs that are helping you out fill out your taxes. It doesn't cost you any money, all the way up to spending somebody who you're going to have on your team on a long-term basis. And I do want to address this because I know we're talking about filing taxes for this year in 2020. And I loved Megan's presentation on all the different components that you have to think about in the life of a business and setting that foundation. Tax planning starts now for 2021. And there are things that if you're working with a good tax CPA who has forethought and is thinking about you, not killing the dead horse because 2020 is gone, can't do much about that. You can do some things, but not really. You can really impact your tax planning to possibly reduce your taxes significantly if you start now with a tax person. So what I would suggest is, okay, wait until everybody's filed their taxes because they're really busy, but put on your calendar in May, make an appointment with your tax person if you have one currently, or look for one in May, and make sure you get somebody who's going to be a partner with you in your tax filings, especially if you're first starting out, you've got your personal and your business. Make sure they're doing both so they can see both sides and see what kind of options you have. And that is going to become more and more and more important the longer you are in business.
I love what you just said, Laura. I think I agree completely. And the only thing I'll add to it is people shop for tax preparation and tax planning based on cost, right? My guy, $300. Okay, here's the thing. You get what you pay for. So when you go to create this engagement, remember, this is someone who's going to help you save you money, right? I'll give you a quick example that happened to me yesterday. Just started working with somebody. And I said to him, well, you've done the Cal Competes credit, which is this credit in California for small businesses. And he was like, no, my former CPA never brought it up. I didn't even know this existed. When you invest in the right people, right? When you spend the money on the tax prep, you will save money over the long term. But it's a constant conversation. When Laura and I are working with people, we're always talking to them. We're always coaching them. We're laying out options for them. So don't just shop on cost. Ask them what you get for the price. And if it's a couple $1,000s, remember, it's deductible. So you're getting some savings.
So Megan, are there any key questions folks should ask tax preparers to know whether they're kind of preparer who has that wealth of knowledge?
Well, I always sort of think, and this has been my experience, is even though we're all tax preparers and tax professionals, we all handle different parts of the market.
Yes.
So my sweet spot is corporate executives. I'm a specialist in executive comp. I know ISOs, all that fun stuff, right? And I deal in high net worth. So I have clients that are doctors, and I specifically refer them out to CPAs who work with medical professionals because they understand that nuance. So I always say, look at what, I would ask a preparer, what does your typical client look like, right? And do I fit that profile? Do you see, how do you see working with me, right? What does the service feel like? Is it proactive or is it reactive?
Yep.
I will tell you, most of the time, you've got to find the right person. It's a chemistry fit, because it's like the swimming naked thing, right? The first time you open up the kimono in front of someone, you're like, oh, I'm so embarrassed. My taxes are a mess. You want someone, I mean, like, I think Laura's a great example. She's very easy to feel comfortable about, but she's got the knowledge there, right? And you want to be able to be vulnerable in front of someone from a financial perspective.
That's a great point. We had a lot of people, Allison started the question, a lot of people also asked, you referred to $5 a square foot as deductible. Is that a federal figure? Is that a state figure?
Oh, that's the IRS. It's the IRS code.
Oh, it's federal.
It's the simplified home office deduction.
Yes.
So again, if you work with your preparer, just say, I've used part of my space. I would like to take the simplified home office deduction.
Okay, so that $5 a square foot is a national number.
But up to 300 square feet. So if you only have 100 square feet that you used, right, you're limited. So 300 square feet is a cap.
If you're over 300 square feet?
Nope,
too bad.
300 is the max.
300 is the max. Okay, right. And are there other tax deductions that they should be asking their preparers or that they should know about?
I take a different approach, right? Because if I were to engage a tax person for myself and my business, you want to, after you've gotten I always work the referral, right? Because you want to make sure not that they're a legitimate business, they've been around, they have the technical expertise, but you want to make sure you have chemistry. And so I always say that you should get legitimate referrals from not only friends and family, but frankly, your banker, your insurance broker, your legal person, your bookkeeper, possibly. They might be working with a lot of different people. And then get a feel for how they operate, how you feel. And when you're in there, you're going to tell them about your business, or they should be asking you about what kind of legal entity setup you are, what kind of revenue you have, how long you've been in business, what you do. And then I leave it quiet and then ask them, what do you think you could do for me? And they should be able to therefore ask, like Megan just demonstrated, hey, did you take advantage of the credit? And if they say, if they don't have any suggestions for you, or maybe you're too small yet and you can't take advantage of it, they should be saying, however, when you reach this level, you need to consider blank. Or I know you don't have a retirement plan in place because you've just started for 2 years and you're barely making, but you should start to think about this in the future. So you want to get the information from them, because you don't want to be asking those questions and I must say giving them hints. I want to see how they think, and is it really just looking at the past, or are they looking at the future to help you reduce your taxes? Because remember what I said, once it's done, it's done. You can do some things, you're picking up some deductions maybe that you didn't have. Your big bucks that you're going to make are when you can work with your tax planner to reduce your taxes in the future. And if they aren't, and sometimes frankly, you get tax preparers and they don't think that way. They're a checklist. Or also, if they just pass you off to the junior person who uses the checklist, those are also signs. I'm not saying those people aren't good, but at this level, you need some hand holding and frankly, a lot of education, because hopefully as you grow, you're going to be becoming a lot more complex. Your personal and your business situations are going to be complex with employees and loans, and tax planning is so important, because if you think about the tax rate that you get paid off, like if you're in California and LA and Santa Monica, your tax rate could be pretty high. It could be, 30, 40%, let's say 50% when you add everything in. So if you think about it that way, you would never, frankly, just do it on your own, and using TurboTax. Nothing wrong with TurboTax. Please, I know this is going to be published. I love TurboTax, but you also want somebody to be able to help you position yourself for the future. And if you were operating your business And if you had a vendor cost that could be, 50%, 25% of your bottom line, you would be all over that for control purposes, right? The same kind of attitude needs to be taken from a tax perspective, because you will be paying tax. If you make money, you will be paying taxes for the life of your business. So better get a handle on it now. Plus, you can think of it as not necessarily a cost center. It could be an incremental profit center for you, right? Reducing the amount of taxes you pay.
Right. So someone said, if my PPP loan is forgiven, how will this affect my business taxes?
It doesn't right now.
That doesn't.
This is why you need people who are up to date on this, because earlier in the year, congressional bill passing, IRS interpretation left it open as far as they did say the revenue wouldn't be counted, but they also disallowed supposedly the expenses related to those costs that the PPP loan covered. The second phase of the legislation that was passed at the end of the year went back and corrected the language. So now that it is that you are allowed to have those deductions. And then for people who are in California, the state actually finally got around to saying we're going to be in compliance with the federal, so you don't have state liability.
And the same in New York. New York has also said the same thing.
Okay. So for those of you who are in all these different states, not all states have done that, okay, by the way. And they might be in the process of doing it, or they might not, in which case you're hearing, oh, don't worry about it for your federal liability, but your state, they might be actually either counting it as revenue or disallowing it as disallowing the expenses more likely for state purposes.
And one thing else with PPP, they've just done PPP Part 2. One of the reasons you should be working with a tax professional is even if you got PPP Part 1, you may still qualify for PPP Part 2, and you need a tax professional to help you discern this.
Absolutely.
And if you get PPP 1, the Biden administration, I think PPP is a great plan. And in the fire we were in April, they were trying to save small businesses. We learned a lot, which we learned that small businesses of 5 employees or less, or solopreneurs, got hit the worst because they weren't prepared to take advantage of PPP. And one of the things I'll say is we learned something from that. And the Biden administration wants to take 2 weeks and allow them to go first.
Right.
Most small businesses that are 5 people or less tend to be female owned or minority owned. So this is a moment to get your 2020 cleaned up so that you can apply if you didn't get it, or if you got it and you can qualify for more, you can go forward or learn more about EIDL. Again, engaging with a tax person right now can be really key with PPP.
And then also I want to put out there the employee retention tax credit, I think is huge. If there's been payroll on it. Before, they said that if you took a PPP loan, EIDL loan, you could not do ERTC, the employee retention tax credit. They changed that again with the legislation in December. Anybody can, not anybody, there's limitations, but if you got a PPP loan, you are not eliminated from taking that tax credit, cash in pocket. But you have to know how to file it. You have to qualify for it. It is supposedly retroactive into 2020, but they have not come out with a mechanism or forms to do that yet. And then also to what Megan said, talking to your tax person, when you filed for your PPP loan forgiveness, and you said, I don't care, let's use all payroll. If you use payroll for PPP loan forgiveness, you cannot use it again, double dip for the ERTC. So maybe there's a way, if you haven't filed already, make sure you're optimizing what you're asking for forgiveness, and then also being eligible for the ERTC. I said a lot of it's confusing. It's very, we're going like this. But that's what I'm saying.
I just like to point out to our listeners that Marilyn Landis did a fantastic webinar with us on the second round of PPP and PPP. So I would really refer you to go to YouTube where our webinars exist and listen to that. Back to the early part.
Lauren, can I add one more question?
Sure.
If you go to a tax person right now and they are not wired on PPP or any of this stuff, don't go with them.
Even if you haven't gotten PPP?
No, or ERTC. They need to be familiar with it, because like right now, like Megan said, maybe you can go back and get funding for that, right? You could possibly qualify. So you need to have somebody. They don't have to hold themselves out of as an expert, but they need to be able to counsel you that say, hey, these opportunities are open to you, and you can make that decision. But if no one tells you about it, then you never get to run the race if they never tell you where it's
Right,
at.
and it's not the tax preparer's fault if they don't know PPP.
Mhm.
It's, people choose to focus on different things. But then it's the
Exactly.
follow-up question is, if you can't help me, who do you know in the tax world who could be really helpful on PPP? Because
usually-
again, I believe in the business world, right? People want to connect people.
Yep.
So they might not be the right fit for you, but to give you the contact info of somebody who can help you get PPP is so important.
Absolutely. And ERTC.
So Megan, early on in your presentation, you talked about LLCs, and a number of people have asked or said, I'm an S Corp, should I really be an LLC? And some people just want to know the difference between the two.
So look, entity setup, it depends on industry. It depends on what you're looking for. It depends. I mean, complexity versus simplicity. Do you want a salary versus, do you want it just to pass through? These are not questions that Laura and I can answer today, right? They're very individual driven. This is where you sit down with a CPA and say, okay, walk me through this. If I'm an LLC and I want to convert to an S Corp, or S Corp convert back to, or, undo the S Corp, what are the pros and cons? Because all of these have pluses and minuses to them.
Mhm.
And, it's interesting because 35% of all small businesses are LLCs and 33% are S Corps.
Mhm.
And so what you find is people like different aspects of it. All of my doctors have S Corps, right? Makes a lot of sense for that industry. I run a business that's tax and then also has an RIA attached, a registered investment advisor. We all do LLCs. So certain industries drive you to the entity. So I think this is about sitting down with your tax advisor, understanding it, and shifting and changing entities is a major business decision.
Yep.
Don't just decide it in 2 seconds. Say, okay, I want to sit with this and think about it. And sometimes you can even ask them to run the numbers both ways. What would it have looked like if I was an LLC versus an S Corp? But you got it. This is very personal and specific.
Okay. So some folks are saying, they had expenses in this year because they either bought things, but they literally had no income. Do they still need to be filing their taxes?
Laura, I'll let you take this one.
Yes. The answer is yes. You can never not file your taxes, even if you go dormant, meaning that you intentionally choose not to be in business. You still have to file a tax return to protect yourself, right? And so in this case, I mean, if you have a loss, sometimes you're allowed to take that loss, carry it forward, carry it back. I mean, there have been some changes in how far you can carry back losses also in this past tax year. So you always want it on record. Well, one, you want to do it because it's legal. When you don't want to, odds are they aren't going to catch you right away. But in my experience with my clients, you're successful, you're doing all this great stuff, you go to do something, and the IRS comes from 3 years later saying you didn't do blank. Oh, and this is your penalty, and this is and meanwhile, we're going to hold up your investment money because your investors don't want to, be associated with somebody with complications. So.
And I think the other thing is, I think of taxes as telling a story, right? If you go back and look at prior years to today, you're telling the story of your financial life. And so what you also have to think about is, for instance, like if you're trying to sign a lease and a landlord wants to see past records, or you're trying to get a loan because you want to buy a house and you haven't filed, you have an omission in your story. And you're going to do more work trying to fill in that omission than just simply filing it, even though you had no income.
Yep.
So again, taxes are a story. There's no shame if the story is, and this year there wasn't any income because we've been hit by a pandemic. But it's much more, okay, how do I tell the story? Am I reporting correctly? Am I doing everything correctly so that as I have income, I can come off of it and benefit?
Yep.
So we have a lot of specific questions that it's clear to me that you guys shouldn't be the ones to answer. It should be their own personal tax professional. But a lot of people really don't know what questions to ask that person. Is there any kind of resource you could direct our listeners to here are some of the things that you should be asking your tax professional?
Well, I think one of the first things, and then I'll have Laura jump in, is I think what is your designation? What is your license? So you can look up someone who's a CPA. Is their license active, right? Are they delinquent, right? These are very obvious things, right? What is your license and what does that license mean, right? So that's important. And you can look that up online. I think the other thing is, it's really what I have found over the course of my career is most people want help. And so the best providers know that you entering the door and just asking for help is the hardest question. And they should guide you, right? In that initial meeting with someone, you should know right away if that person's going to be the right fit. Yep. So I would tell you, interview 2 to 3 people. And I really feel strongly about this as a woman is, as a female business owner, I try to hire women whenever I can, because again, I want people to hire me. And I feel like being a female business owner, there are struggles, right? We all go through these struggles. I mean, we all have that imposter syndrome. I know you guys have talked about that on these webinars and so on. And to be able to have a provider who can understand what it's like, it makes a world of difference. So I don't know, Laura, what you want to add. I'm just going to pause here.
No, I totally agree with what you're saying. I think that Megan made a comment like several conversations ago about you're going to walk in and you're going to know very quickly. You'll know within 3 minutes. Okay. So if you have a hard time getting an appointment, that's one. I mean, like you said, the closer we get to tax time, it's going to be harder. Do they respond to you? Do they get back to you? You have to keep following up. Do they explain to you what, not only your solution that they think you should do, but what are your options? Because rarely is it just a flat out, unless it's, do I have to file taxes? Yes. Okay. Your business. That's about the only time it's a very yes, no kind of answer. Almost everything has options. Now, they might not be as good, but they should be willing to explain to you why they said, this is what I would suggest. This is what I think you should do. You could do blank and blank. This is why I suggest not. Because what you're trying to do is get somebody to be on your team long-term, to increase your tax knowledge, not so that you don't need them anymore, but because you're going to have be able to make much more complex, significant decisions down the line. So you got to start now with somebody who's willing to explain to you what's going on. There's a lot of things on the internet as far as you can read about people's tax, background, etc. And then, like Megan, you can also go online. I know you said go online and see if, they're still licensed and all of those things. You can also go online and see if there's any complaints against them. Mm-hmm. So if there are complaints, I mean, if there's one, or, maybe something could happen, but you've got somebody who's got a whole, more than one, a pattern, that's also a sign. Talk to, like I said, people who know, who are in the business, right? Who are giving advice, and then also talk to family and friends and see. It is. I know people a lot of times tell me that's too much work and they don't want to do that, and I go.
Well, I think what we've heard from you both is that it's worth it. So thank you, Megan and Laura. This has been incredible.